Wall Street erases losses as peace hopes counter a massive naval blockade. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 rallied 1% to close near 6,900. The Nasdaq jumped 1.2% to roughly 23,200. The Dow also finished in the green, climbing 0.6% to around 48,200. The Magnificent Seven had a strong showing today, led by Microsoft soaring nearly 4%, while Alphabet, Amazon, Tesla, Meta, and Nvidia all posted solid gains, leaving only Apple slightly in the red. Technology, materials, and energy were the clear winning sectors today, while healthcare and consumer staples ended up as the main market losers. Bitcoin surged over 2% to trade near $73,000. Gold slipped 0.5% to roughly $4,760 an ounce, and silver dropped 1% to $75. Meanwhile, West Texas Intermediate crude oil remained highly volatile, jumping over 1% to near $98 a barrel. The biggest catalyst today was the collapse of diplomatic negotiations in Islamabad, which prompted the United States to launch a naval blockade of the Strait of Hormuz to cut off Iranian oil revenue. This extreme escalation directly caused the massive spike in crude oil prices and created intense early selling pressure across all major equity indexes. However, markets staged a spectacular intraday reversal after President Trump announced that Tehran had reached out to resume peace negotiations. This sudden spark of hope caused equities to erase their morning losses and sent technology and software stocks soaring as risk appetite rapidly returned to the market. Finally, first quarter earnings season officially kicked off with mixed reactions. Goldman Sachs beat revenue and earnings estimates, but shares fell nearly 2% due to a miss in trading revenues, while Fastenal dropped about 5% after issuing a cautious outlook, adding to the turbulence in the industrial sector. The 10-year Treasury yield hovered around 4.3%, while the 10- and 2-year yield curve spread sat near 31 basis points. The US dollar index remained steady around 98, and the VIX volatility index eased slightly to 19. These metrics show that while the market absorbed the geopolitical shock, investors are demanding higher risk premiums amid sticky inflation expectations. The CNN Fear and Greed Index is currently reading 38, keeping the overall market sentiment firmly planted in the fear zone as investors remain extremely cautious. Looking ahead, the broader market outlook remains bent but not broken. Analysts project S&P 500 corporate earnings to grow by double digits, but cautious investors are waiting to see if rising energy costs will erode future profit margins. Over the coming days, markets will be watching the critical producer price index report tomorrow to gauge inflation pressures. We will also see a wave of major bank earnings tomorrow, including JP Morgan Chase and Citigroup, followed by closely monitored weekly jobless claims on Thursday. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.